Hello. Alright, here we go. Today we're gonna talk about today we're gonna talk about WELL's Health Technology, their second quarterly report, and we are here to do it bright and early in the morning. So what I mean is that right now it's quite early to discuss something, and it is crazy how much people are really watching about it. I'm pretty excited about this report. So this is a healthcare company, as many of you know. It's in it's in Vancouver, and yeah, we're gonna get started with this report, and there's just so many things that I have to talk about. It's unbelievable how much institutions and retail have known this company, and it's a really big company in itself, and actually it's gonna get even bigger and bigger for the next decade. And hello, Yu. Hi, Yu. How are you doing? It's my first time probably meeting you, and thank you for joining in. How did you find out about this video? It's pretty early in the morning, so it's really early because it's like 6:30 for me, and I never really wake up that early just to do something like that. So it's really bright and early, and I am really not used to it sometimes. So let me see if I can double check this thing. Firefox. There we go. Not sure, first time meeting for sure. Yeah, if you can let me know how you figure out about, how did you find out about this video in a way, and that would be great to know. So anyways, we're here to really talk about it. Let me tell you, wow, look at the crazy movement. 6% for this. Actually, you can still say it's kind of like a medium cap company, right, in a way. You can still say it's small in the world, in the terms of healthcare, but we're gonna really talk about it because they released their quarterly results 3 hours ago, and that was when I was sleeping. Guess what? I live in Vancouver, where WELL is right now, and 6:30 for them is really early. And wow. Okay, let's talk about it, because analysts predict them to earn about 56 million in revenue, and the highest is 58 million, and we'll see if they achieve that. I think they did, because there's just so many moving pieces in a way. There's so many acquisitions coming in and out with their My Health Technologies, CL Medical, is that right? Something to do with CNL Medical, something to do with gastrointestinal service, and they are also actually expected to lose 1 cent of profit. So they're expected to lose net income this quarter, but we'll see if they can become profitable as well. So yeah, you not sure, first time meeting for yeah, okay. And so did you figure out this video through Yahoo Finance? Because I posted this on Yahoo Finance in a way. So doesn't really matter for growth stocks in a way. Important thing is to continue reaching out to the crowd, to the consumers, and then you can be profitable in the future. Okay, so that's one of the big reasons why I'm invested in WELL. Okay, so yeah, let's go talk about it. I already announced it on here. It's so bright and early in the morning. It's sometimes hard to focus for sure. But let me know, what are some of the reasons you guys are invested in WELL, you know? Let me know. So, how did you hear about this company? What are you doing with WELL today? Holding. Are you buying more? Or are you holding? Or are you just selling? This is my question to the community today. Okay, so let's really talk about it because it's so bright and early in the morning. I might just go crazy. I'm still trying to focus in a way, so let's do it. Yeah, this is a big institution. Really buying into the stock. And unfortunately for me, I had to sell out like a week ago or something because I needed the money to buy something else. It's not that I didn't believe in this company. I actually was going to buy this company again, but I had to buy something else that's more important to me, and that's one of my marijuana stocks at a much cheaper price. So it's a 6% drop, but you know, this is a great company in itself. It's really great managed. I will buy it again for sure, but right now, you know, with this big movement, I'm not buying it. Maybe once it goes back down to, you know, $7.50 or $7 in a way. So yeah, let's talk about it. Wow, WELL Health achieved record revenue and adjusted EBITDA in quarter 2 with 484% year-over-year revenue growth and 615% growth in its adjusted gross profit. Okay, let's talk about it then. So they reported record revenue of 61.8 million in quarter 2 compared to quarter 2 of last year, and that's a 484% growth, beating estimates easily. Yeah, maybe by that about 10% in a way. Okay. So what else is new about this company? Wow, so let's see what some of the newest reactions. This is huge. Okay, and other than that, let's talk about it. And now they achieved their third quarter in a row of positive adjusted EBITDA. So that's really talking about, you know, how their earnings are before all that tax and other stuff, of 11.9 million for quarter 2 compared with a loss of last year. So that right now, if you use this estimate, they are profitable. You know, they aren't losing money. Their adjusted gross profit is 30 million compared to 4 million last year. That's huge. Okay, and then they achieved their gross margin percentage of 48.9% this quarter as well. Strong outlook for third quarter is attributed to the full contribution of CRH and MyHealth acquisition. So those are the two I've been talking about. You know, those are the huge ones, and that helped WELL annualized revenue to almost 400 million. Okay, that's gonna help them bring their annual revenue to 400. Now let's hear what Hamid Shahbazi, this guy, Hamid Shahbazi, the CEO of this company, has to talk about it. Our practitioner enablement platform and momentum around our acquisitions are delivering extremely strong financial results. We're grateful to the healthcare practitioners and clinicians that provide outstanding care every day, as well as the technology and administrative teams that support them. There are some key takeaways worth noting from these very strong results. Firstly, our gross profit, adjusted gross profit, increased 615% year over year. You know, that was when it was still like during the crazy time of the coronavirus. So it shows to you how strong this company has actually grown year to year. And we achieved adjusted gross margins of almost 49%. Furthermore, we closed the acquisition of CRH followed by acquisition of MyHealth in Q3, which now puts us on track for almost annual revenue of 400 million. So that's what he really repeated. But in addition to these acquisitions, we continue to be active with our corporate development activities, so our M&A activities in a way. And then in Q2, we completed acquisition of Intra Health and a 51% majority stake in Doctor Services, and our CRH business unit made 3 majority stakes in the quarter. More recently, we announced the formation of Well Ventures, a subsidiary whose mandate is to invest in businesses that are advancing in the digital healthcare ecosystem. So in a way, obviously they want to become huge in the healthcare world, right? That's what it's all about. Okay, so they achieved record revenue growth of 61.8 million. Billion, that's too insane. Okay, that's way too insane. By the way, I'm just gonna advertise more because I hope people can check this out. Yeah, let's really talk about this. Come on, guys. Yeah, wow, did I wake up early for this? Okay. So you know what? Come on, let's get this promotion on. Maybe you guys aren't that tired, but I am, especially in the morning. I'm not a morning person. And look, with the markets down right now, I've never woken up this early before. Never ever woken up this early before. It's kind of insane how many yeah, it's kind of insane how many people are reacting right now, and so I'm trying to get my promotion out there. That's how I get my promotion out there in a way. Hi. If I don't get my promotion out there, nobody knows what's going on. Really, nobody knows what's going on, and then that way, I want to hear what people are talking about in a way as well. So. Live reaction to the latest quarterly results. There we go. Join me now. There we go. Hopefully others can know about it as well. So here it is, big 6% move. And now let's see what else. Let's continue looking at it. Okay, so this record 61.8 million compared to last year's 10.9 is almost 6 times increase, right? An average of 484%, driven primarily by the CRH acquisition, which accounted for revenue of 36.7 million during the quarter. So basically, the CRH acquisition made up for half of the revenue. That's how huge it is. So that's how important this acquisition is to this company in itself. So you obviously want to see them more diversified in a way, because if you just rely on half your revenue from this, if something goes wrong with this, that might be a big problem, right? Virtual services also increased to 12.5 million compared to 2.3 last year. That shows you the growth of healthcare as well. Adjusted record gross profit of 30 million, compared to 4 million last year, and also record gross margin percentage of 48.9%. Pretty profitable for healthcare in itself. Now, when you compare it to, Lavingo, Teladoc, and all that, and a lot of other healthcare companies, this one is a star amongst all of them, I believe. I believe this company is better than all that in terms of investment and management standpoint. And so, I'm kind of disappointed in myself in a way. But you know what? That's what it is. Sometimes there's market corrections, and so once there's a market correction, I'm gonna be definitely buying in again because my portfolio feels incomplete with this company. It really does. It really, really does. Adjusted EBITDA 11.9 million compared to a loss of 0.5 million last year. Positively impacted by the addition of CRH. And it delivered about 559,000 omni-channel patient visits. In-person visits was about 240,000, while telehealth, so virtual, was 317,000. Good balance right there. Business highlights: they completed the acquisition of CRH, a high-quality healthcare service, and emerged as an anesthesia services to the gastrointestinal community. And they also had a lending of 300 million involving credit, so that's fine with them. They can borrow as much money as they want. They're expanding, they can always pay it back, and that's important. So, this company is doing great things, and yeah, this listing to the Nasdaq is huge. This company is going to be huge. And there's a lot of institutional money in this already, so I feel sad in a way. Like, I sold out of a great company just so I can buy another part of a good company, but that's just part of it. I hope there's a correction, price correction, not price correction, but like a sell-off in some way, and so there might be really huge institutional support for this. So I don't think I'll ever get down to probably $7. Hope so. I hope so in a way. So they completed acquisition of Intra Health, Exact Health, and a 51% majority shareholder base in this company. The newly acquired CRH completed 3 acquisitions in a quarter, 85% in this one, in New England Associates, this one, and this one. Okay, so yeah, this is pretty big in itself. So with this acquisition of MyHealth, they're now the largest owner-operator of outpatient medical clinic in Canada. And to say that they're not a healthcare giant in Canada is an understatement in a way. They are actually one. Okay? And they're gonna get even bigger and bigger over time. And look, they bought... So they used more of their share to buy that company. So 206 million at $9.80. And then they also had some lending as well, 200 million provided by these banks. MyHealth represents a major acquisition for the company for the following reasons. It significantly boosts WELL's free cash flow, which would be used to make additional cash flow generating acquisitions, accelerating WELL's revenue and EBITDA growth profile. It establishes a strong presence for WELL in Ontario, with 48 additional healthcare clinics locations, and expands WELL's expertise into this diagnostic and specialty services. So WELL's actually expanding into all areas of healthcare, not just gastrointestinal in a way. So I am pretty intrigued by this company and always impressed by what they're doing, and this company deserves to be called a giant, in a way. I think it deserves to be. Yeah. I'm just quite tired. Like I've been saying all along. Very tired with Okay, and then let's take a look at its outlook. On track to achieve its goal for 2021, build out and refine its practitioner platform, and use its service to internally help healthcare practitioners as well as offer its service to healthcare outside of well. And then they want to achieve organic growth across all business units, a good discipline and capital allocation strategy, grow its adjusted EBITDA throughout the year, and increase operating cash flow through its acquisitions, as well as market share for its digital health and virtual care program. So, yeah, we are witnessing something pretty huge. Expecting its substantial revenue and EBITDA growth experience in quarter two to continue into quarter three and beyond. So with that acquisition, it makes it a clear leader in the Canadian healthcare market and strong emerging player in the US healthcare market. Currently expects its annual revenue of $400 million and approaching $100 million in operating adjusted EBITDA. WELL continues to have an active pipeline of acquisition opportunities in both clinical and digital assets. Now they have 3 engines of merger and acquisition growth with corporate development in CRH, MyHealth, and WELL Corporate, thereby effectively scaling the company's inorganic growth potential. So, taking a look at its revenue breakdown in a way right here, huge. Cost of sale, much bigger, but it's to expected with a growth company like this. Net loss, they still have net loss, but you know, they really use that number. You know how you measure themselves is their adjusted, you know, adjusted EBITDA or EBITDA in itself, not net loss, because factoring taxes and stuff. Oh wow, actually they're profitable, 11,000. Yeah, so that's very good to know too. Hold on, just making sure. Total comprehensive loss. Sorry. Adjusted EBITDA is 11,000, but their net loss is still negative 14,000. So no, or 14 million in a way. Huge. So quarter over quarter, this number is gonna grow smaller, okay, and eventually by quarter 4, I think they will be profitable in terms of net income, okay? Not adjusted EBITDA, they already are, but they will. So, this missed analyst expectations, obviously, is much bigger in a way, negative 0.08. So that's even surpassing the highest estimates. So adjusted EBITDA in US and also in Canada. US operations actually much more profitable compared to Canada, which is weird because this company is bigger in Canada. So, conference call coming up at 10 o'clock. I will definitely be listening in and see what they have to say about their NASDAQ listing, alright? Because they are going to list in the NASDAQ, alright, eventually. And it's going to be happening in quarter 3. So yeah, what am I doing in this company? Buying, selling, or holding? Well, I already sold this company a week ago and stuff, so I'll be buying again. Buying again, you know, when it hits, you know, another 10% drop or something, which is very possible. You know, I've learned to be much more disciplined in my buying and not in a rush. Like before, I'll be like 6%, I'm still buying. But you know what? This company is going to grow, and they are gonna experience a day where it's gonna be red, or you know, a pattern or consecutive days of sell-off. I'm not in a rush, but as long as I see great results, that's all I care about. That's really all I care about. Okay, another great quarter by Hamed Shahbazi and his team. Everyone there did amazing, and yeah, I am going to be buying again. So thank you very much for watching, actually, all of you. Even though we have one viewer here, are you still watching? And what makes you continue to still watch? because it's quite bright and early in the morning, and I really appreciate it because there's only you in the morning, only you. Now let's check out the markets. What else is happening in the markets? What's the news? Stocks dip after jobless claims meet estimates. Producer prices rise. So cryptocurrency are down today, but a lot of the trading tickers: Palantir 11%, Clover Health 11%, Open Doors 13%. Wow, that's huge. So they must have done well on their earnings. They must have done well. Most active in a way. Yep, huge. Palantir. Wow, look at all this huge movement. Is it just because they also reported their earnings right before the bell? Anyways, I'm done for today. It's been a tough morning so far because it's just me waking up is hard in the morning. So, but really appreciate it, and so thank you very much for watching in a way, and take care as well.